right, and good morning and good afternoon, everyone. Welcome to today's webcast, Modernizing the Month-End Close Process Within a Digital R2R Process. Really excited to be spending a little bit of time with you here today talking about this concept of record to report and really bringing it into the 21st century here and applying best-in-class not only process, but technology and automation. So maybe to lead off with here, I'll go ahead and we'll dive right into introductions. My name's Jeremy Soharski. I'm a partner with Armanino. I'll give you a little background on the firm here in a moment, but maybe just a quick story about myself and what has brought me to the technology and automation space. Started off my career early on working for the federal government, and I was doing a lot of data manipulation, data input, and I started asking questions about how come we can't make System A talk to System B, and how come we can't build a better mousetrap. Fast forward 20 some odd years, and it's really brought me to business software, including helping to lead Armanino's BlackLine practice with my colleague who I'll introduce in a moment. And it's really built that passion from day one on how do we think differently and challenge the status quo, and how do we take technology and really embrace it to the betterment of our teams and really release that full potential. And I'm really excited to share some thoughts and ideas with you today on how you can bring those same concepts back to your organization. I would love to hand it over to my colleague, Nargis Adaran, to introduce herself as well before we get going on with more details.
Perfect. Thank you, Jeremy. Good morning, good afternoon, everyone. Thank you very much for taking the time to join us today. As Jeremy mentioned, I'm also very excited to share with you how can the Armanino and the technology that we have here help you and your organization be more productive and spend more time on more strategic initiatives versus spending time on manual efforts that can be automated through leveraging technologies that are built from the ground up for that purpose. What brought me to the organization, similarly, my background, I started as a software engineer and then transitioned to business side of the business, working with business leaders, understanding their day-to-day activities, the areas that they're struggling with, working with a lot of smart people like you who want to take their business to the next level. It's one thing to have this strategy and plan and moving forward, knowing what is going to happen. The other thing is to make sure you have the right tools in place that's going to enable you and your team to be more strategic versus being reactive to the activities that come up and all the manual processes. We'll get more into what it means and what are the costs of this. But before that, I'd like to hand it back to Jeremy to start with a quick intro about what you should expect in the next few minutes. What are we going to talk about, who we are as a firm, and why we're here today. So Jeremy, take it away.
You got it. Thanks, Nargis. I appreciate you diving in with that introduction here. So really quickly, let's touch on the agenda. What are the key components we're going to go through today? We're going to review the key components of record to report and define for you what is this reporting cycle that we keep talking about. We're going to talk about why automation is more important now, more so than ever. Really, if you look at what's happening in terms of external disruptors that are influencing the accounting and finance profession, we've never been faced with more disruption in the history of our profession, and now is the time to think critically about how we leverage automation, and on the flip side of that, how we then redeploy our workforce to higher value tasks. We're going to talk about ways to drive a faster close, improve your compliance, enhance your decision making. Again, really giving your employees those tools, those capabilities to level them up and get more out of these highly trained, highly educated professionals. And then last but not least, we of course want to evaluate some tangible methods for you to improve your record to report processes. All right, well, as Nargis mentioned, I want to give just a quick snapshot of who Armanino is. You know, for someone who's been here for quite a long time now, the vast majority of my career, I think we're a pretty unique place here. Our core purpose is to be the most innovative and entrepreneurial firm that makes a positive impact on the lives of our clients, people, and communities. Well, how do we do that? We're the 20th largest CPA and consulting firm. While we're headquartered here on the West Coast in California, we've got offices, 17 offices scattered around the United States, employees in just about every state, and we do work both nationally and internationally. Maybe one thing that I'll highlight here across the bottom is some of the awards and recognition, the vast majority of which really are focused on our people. And that's one of the things I'm most proud of. We have one of the lowest turnover rates in the industry. And what does that mean for our clients and for our partners? It means that we not only attract the best talent, but we retain the best talent. And it means you're not having to have the revolving door of professionals as you're working with a firm like Armanino. So just wanted to share a little bit about us so you've got a better idea of who Armanino is and how we might be able to help should you need some outside assistance. Now, we want to go ahead and lead off the sort of meat of the discussion today with what I'll say is a bit of a provocative question and is going to be, honestly, a bit of a shameless cliffhanger here. So we're going to ask the question, but we're going to make you stick around till the end to find out the actual answer. And the question is, can financial transformation save a marriage? Can leveraging automation make your home life better to the point where it will ultimately save your marriage? And so, again, completely shameless cliffhanger here. We're going to ask that you guys stick around till the very end. I promise we will come back, and Nargis has a great story that will answer this question for everyone. Well, as we're here today thinking about transformation, thinking about automation, talking about record to report, I'm a big numbers guy and I'm very visual. So I wanted to lead with some of the statistics that I've leveraged recently in not only my research but also in presentations that I've shared through various outlets here. And a lot of these really speak to the struggle to transform. There's this great desire amongst accounting professionals, amongst business leaders to move forward and transform their business. In fact, the first one here, 73%, speaks to this imperative for transformation. 73% of business leaders believes that they will, that their company will fail if they do not transform. And so that just to me speaks volumes about what organizations are having to go through. You know, if you think about some of the sort of, you know, go as far as calling them cliche examples of how businesses are needing to transform, you know, Airbnb, you know, I'll use these at least pre-COVID, you know, Airbnb is the most profitable, you know, real estate company, but they don't own, you know, any physical real estate. You know, Uber is the most most valuable transportation company, but they don't own any cars, et cetera, et cetera. Thinking about these different disruptors and what it means to companies that have been around for a long time or even fledgling companies, thinking about how do we rethink our business? How do we make sure that we are transforming to make sure that we are here so we do not disappear in the future? If you then move to the right, then you know one number, you can see there 40% of all technology spending in 2019 went to digital transformation, which I just found to be fascinating. I've not found a good number for 2020 yet, so I still rely a little bit on the 2019 number. But this is fascinating if you think about all the investment maybe your company is making relative to technology, and nearly half of that is not just to kind of keep the lights on, not just to enable business process, but it is to truly transform your business. That to me is really, really telling. So if you look at it and you say, hey, Jeremy, we've got this imperative that we have to change, or we're throwing all kinds of dollars at it, wow, it must be an amazing transformative world out there. And the reality is not so much. You know, more than half of digital transformations fizzled for a wide variety of reasons. You know, so if we're looking at this, you know, and you've only got a 50% success rate, you know, if you're playing baseball and you've got a 500 batting average, well, you know, you're in the Hall of Fame. But in business, those type of statistics, that type of batting average doesn't really cut it. And it really holds true here with digital transformation. Why is that? You might be saying, okay, great, we've got an imperative, we've got the dollars, why aren't, you know, we're not having success? Well, why? What is it? And really what it comes down to is, I think, one of the biggest intangibles that commonly gets overlooked, which is its people. At the end of the day, resistance from employees for a wide variety of reasons, not buying into the vision, not wanting to change, not understanding the technology, not being properly trained, a wide variety of reasons. 70% of digital transformations ultimately fail to reach their intended targets. Now, it doesn't mean that they have not had any impact on the organization. It means that they have failed to have the desired impact on the organization. 70% of the time fail because of some type of human element. Well, how do we then figure out how to move from these statistics and ultimately go work and transform our business? Well, one of the ways to do that is what Armanino calls the CFO Evolution. This is a piece of thought leadership, really the seminal piece of thought leadership that the firm has produced and has continued to revise for over a decade now. And really what this speaks to is something that we found when we endeavored years ago to find a different way to work with our clients and a different way to have a discussion with them. And so we went out, we spent a lot of time interviewing CFOs, corporate controllers, accounting directors, heads of finance, tax directors, really to understand where they were spending their time. And we've represented it here in this graphic. What we found was the common allocation was on the left. You know, you've got these three different roles that we helped define, and we allocated time to each. The first one's the accountant, this idea of being fast and accurate. How do we get our financials done? How do we make sure that we've got our books in good order? From there, we had this idea of a protector role. How do we make sure there's no surprises? Then last but not least, being a business leader, looking forward. And as we thought and as we worked with our clients to better understand how they're performing these roles day to day, where is their time being spent? Across the board, the vast majority was being spent on the accountant role. Vast majority. A little bit on the protector and very little on the business leader. And as we said, hey, well, how are we going to get you there? What is the ideal future state for you in terms of time allocation? Across the board, again, every response was, let's flip it on its head. I want to spend as much time as possible being forward-looking, being strategic, being a business partner to my peers, whether it be in the C-suite, the COO, CEO, et cetera, interacting with the board, et cetera. About the same amount protecting the business, making sure we've got no surprises, and dramatically spending less and less time on the accountant role. We want those numbers to be as streamlined as possible to ultimately get to the final output, thereby enabling us to go be that strategic leader. And how do we get there? What we found was we then would interact with clients and put together programs and work with them across people, process, and technology to help them achieve this transformation. And this really is the foundation for much of the strategic transformation work that we've done for the last decade and are continuing to do now, is really looking at where is your time allocation, using Lean Six Sigma and design thinking methods to really understand the nature of the work they're doing and how we can help them build that better mousetrap. Well, as we fast forward here nearly a decade, this framework has been well received in industry. We've put out a lot of thought leadership around it. And what we realized was it really was time for a refresh. And so we did some additional research, some additional interviews, over a long period of time, over several years, and did a refresh to what we're calling the CFO Evolution 2.0. And it's really rethinking the paradigm here, thinking about the different time allocations that we had, and thinking differently about how do we ultimately capture these market disruptors, technology disruptors, geoeconomic, political disruptors, and how do we position the CFO in their organization to really be in that lead spot? And it's this idea of being a transformational CFO, and it's really tapping into two core values or core skill sets that need to be brought to the table, and it really is being an innovator and then being an influencer. So let's talk a little bit more about what that means and how do you become that transformational CFO. We talked about it being an innovator and an influencer. An innovator is someone who's going to embrace that change across the entire organization, not just the finance department. They're going to work with others to invent those new business models, look at their competitors, determine where they've got advantages, put together staffing plans that are nimble, et cetera. Again, I bring it back to the same reason that I wanted to be doing technology and transformation work, going back to those early days as I described working at the federal government. An innovator thinks about how can we do this differently and how can we do this more effectively? Can we build a better mousetrap using the tools that we have at our disposal? On the flip side of that, you've got an influencer, a CFO who's going to build consensus, initiate action, and implement those innovative ideas. It's only half the equation if we come up with great ideas. If you can't build influence to get people to help support those ideas and push them forward, then at the end of the day, you're not going to achieve that transformation that you're desiring, and you're going to fall into that bucket of 50% that did not achieve the desired outcome. And as I described, the reality is, these great ideas, that are not fully executed are simply wasted opportunities. So it really, really is incumbent on the CFO, a transformational CFO, to balance these two characteristics. All right, so you guys might be looking at it now saying, hey, Jeremy, I love the statistics. You're sort of backing up the argument here. The CFO Evolution framework looks incredible. I can't wait to get out to Armanino's website and download the white paper, which, by the way, is out there at no cost. Where do we go from here? Where do we start? And I would tell you that is a fantastic question. Really what we have to do is start by looking inward and looking at our business processes. And what I would challenge is that most organizations overcomplicate their business. And the reason I say that is I think we can distill any business that I've worked with, and I would challenge any business that is here today, down to 3 primary cycles from a finance and accounting perspective. Number one, you've got revenue. You've got money coming in. And yes, there's a lot of sub-processes. There's a lot of nuance to it, especially you've got incredibly complex revenue models. This is by no means easy. But we could put a lot of things under this umbrella, put them in the bag of revenue. On the flip side, we've got a spend cycle. We've got money going out the door. We've got to pay our employees. We've got, accounts payables. We've got vendors, partners that need to get paid, et cetera. And then the last one really is the reporting cycle. And that's really what we're going to drill into here in just a moment with this concept of record to report. And I would challenge to you, from working with all of these great technologists and all of these great, smart, talented people for so long, the vast majority of the time when we talk about transformation, the immediate pivot is to revenue or spend cycle. What are we trying to do? Well, we're trying to do ERP, or I'm trying to do, implement Salesforce, or I'm trying to then implement CPQ within my Salesforce instance or within my CRM. So I'm really trying to refine my lead to cash process that fits within that revenue bucket. I'm trying to hone in my supply chain activities and really make them as lean as possible in that spend cycle. And the reporting cycle is sort of the one that just sits there and maybe doesn't get the attention and doesn't get the investment, but can have a profound impact on the transformation of an organization. So what I want to do is drill down one more level here, and let's talk about what that record to report process looks like. Of course, it's going to start with recording those transactions, and that's where investment in your revenue and your spend cycles can absolutely have a secondary benefit. The more streamlined those processes are upstream, the less you're going to have to do a large amount of rework and cleanup once you're getting into those period end close activities, once you're going through and having to get into reconciliations, et cetera. So that record process flows right into your close process, which is going to be your period end. Could be month end, quarter end, year end. Of course, each one of those might bring slightly different nuance to it, different requirements. If you're public versus private, different requirements as well. But how do we go back to that CFO Evolution framework, the accountant role? A lot of this speaks to how are we going to be fast and accurate and give us more time to be analytical and go engage as a business leader. And that ties right into this next component of record to report, analyze. How do we then take a look at our final results, not only take a look back at what happened, but take that and all of the other data we have at our disposal to fast forward and say, predictively, what does the future look like? What is coming next? Last but not least, how do we then take that and solidify that in the appropriate reporting, whether it be management reporting, flash reporting, could be board reporting, could be regulatory reporting if you're a public company, whether you're having to report with the SEC or some other type of jurisdiction globally. And so really what we look at here then is this end-to-end spectrum of record to report, and we can look at people, process, and technology relative to each one of these to help drive incremental transformation across the business. But what does that look like from a technology perspective? Well, the great part is there's awesome technologies out there that are going to help us enable this. Now, I will challenge, while I'm showing technology here, what I do want to go back to briefly is this idea of how do we transform. And if you recall, sort of sitting in the middle from where the time allocation was to where it wants to be in that CFO evolution was people, process, and technology. And we always evaluate transformation opportunities in those orders for the exact reason that our statistics showed us at the beginning. If we don't focus on people, our likelihood of success goes down dramatically. So assuming we've covered off on that, we can now look at process and technology, and those are so inextricably linked that we have to look at them almost as one and the same. And so on the record side, that's going to be your ERP, whether you're looking at NetSuite, Sage Intacct, Microsoft, SAP, Epicor, so many different ERPs that are out there that can help you really, really streamline and focus on that record piece. What we're talking about today here, and we're going to pivot to in much greater detail in just a moment, is BlackLine. I challenge there's nobody out there better with close automation and close effectiveness than BlackLine from a technology perspective. It's why Armanino has partnered with them. We believe in the product wholly, and it really is for that reason. Nobody's going to do this better. As we move into the analyze piece, that's where you're going to be looking at more of your FP&A and reporting tools. We represented Workday's adaptive planning tool and solver. It could even be others. It could be your business intelligence layers. It could be if you've got a data lake with visualization on top of it. All of those different components are really going to help from an analysis perspective and helping you make sense of those numbers and fast forward and be more predictive. And then last but not least, looking at your reporting cycle, and Workiva uses a great term called the connected reporting process. And it's really thinking about, we take all of these processes and all of these technologies from record to close to analyze, and what do most of us do when we have to produce a report, whether it be for a board, for the SEC, et cetera? Well, we spit all this data back into spreadsheets, PowerPoints, and Word documents and have to manually tick and tie. Well, it increases it increases the likelihood of error and decreases velocity. So working with a best-in-class tool that has a higher degree of connectivity like Workiva to automate that end-to-end process is really going to bring you a lot of details here. So I'm going to pause here and actually hand it off to Nargis, who's going to pick up and drive the discussion a little bit deeper here. And we're really going to hone in on that, on what BlackLine can do and what they can drive from a close automation and close effectiveness perspective. So Nargis, I'm going to advance the slide and hand it to you.
Thank you, Jeremy. Appreciate it. Great intro. And I hope that everyone listening to this, remembering that the main topic we want to focus on is what is the value of automation? And with all these technologies that we have in our organizations, where are things falling through the crack? It is a fact that manual accounting processes, even though we're leveraging so many technology tools, these are one of the top frustrations of every accountant. There's a lot of repetitive work. There is endless spreadsheets. There are late nights at the end of every month, and you're putting your best talent to take care of the things, that solutions that similar to the ones that Jeremy just talked about, excuse me, can come into play and can make a huge difference. To visualize this a little better, on one side, you may say, yeah, we have an ERP system. It's a robust tool. On the other side, we're having a great process when it comes to planning and analysis and reporting. That's exactly right in the middle when things are falling through the crack. And this is based on research that we have seen from industry-leading companies and also us sitting down with our clients trying to understand their business processes, especially when it comes to closing the quarter, the month. The problem is visibility and also sending, emailing, Excel spreadsheets back and forth, and then not knowing who did what on that particular document is bringing a lot of frustration. The cost is actually more. I want to pause and talk about this a little bit. The 5 major costs of manual accounting. So if you're sitting back and thinking, it's fine, we can afford to have these manual processes, it's probably going to be more costly to have a solution in place for month-end close activities or to bring more automation to the organization. But I'd like to invite you to rethink that and just be flexible with considering multiple options because, again, as said, research shows that manual accounting is extremely costly, and we'll talk about in details into the 5 major buckets that is driving costs to organizations. These might be hidden costs that you're not seeing, and then putting them to numbers can bring some more visibility to what it means to every organization and how we're losing money without seeing it, without documenting on our GL numbers, but how can we prevent this? And we want to explore that a little better. So let's start with the first cost, and that is time. As you see, and again, we're seeing this again based on the research that that was conducted. It is no secret that the manual accounting and all these activities that are happening, they're taking your people's time. 30 to 40% of the time can be reduced by leveraging a tool. And as you see on screen on these data points, depending on who's doing that activity, really doesn't matter if it's your top performer in the organization, if it's your middle performer, or if it's your bottom performer. If they don't have the right automation tool, they're spending time on doing things that is just wasting their time. And it could have been a click of a button, or even bringing automation, having the system taking care of those transactions. Instead, they're sitting down, they're comparing two Excel spreadsheets manually together, and it's no matter what level of expertise they have, they all are impacted by wasting time on activities that are being manual and those spreadsheets that are being emailed and manually transferred within the organization. Now, the next area is cost. Okay, what do we mean? We just talked about the time. Research shows that 48% of U.S. companies are not using any automation when it comes to reconciliation. And again, you can see the cost per employee, like bottom performers, median, and also top performers. The personnel cost that it takes every organization on $1,000 in revenue, how much it's costing their finance organization. And again, these are the things that, as I said, might be hidden costs that you're not seeing. There is not an expense report being submitted so that you can effectively measure it. But when we're measuring productivity in organizations and thinking about the first question that we ask, how can we have a more productive conversation and in our organization, leading to having a better, more productive team, and being proactive about activities versus being reactive when everything is on fire and we now need to lead and process in a chaotic situation. The next cost of manual accounting is really risk that companies' manual processes often may cause. And we realize that all people in the organization, they have good intentions, but when we don't have visibility to enough data or don't know how documents are moving forward, or which step of the process is this, for example, reconciliation process, we may rely on bad data, and that may lead to bad decisions in the organization. Again, you can see, across organization that what the risk that companies are being exposed to due to the lack of visibility and running processes manually. Jeremy, I want to pause and say, I know you have extensive experience in this space. Is there anything you'd like to add about this topic?
Yeah, absolutely, Nargis, and I was going to jump in there, so your timing is perfect. You really just hit on two things, one related to cost, and then we'll pivot to risk here as well. From a cost perspective, it's always one of my favorite things to drill into with organizations lately. And for me, really, it's this idea that as we have technology disrupting our organizations and technology being far more capable today, now more than ever, of taking over certain manual tasks, routine tasks, really what it's forcing us to do is think about not only cost, but what do we do with our employees? If we're able to take those manual cycles out, of the process, well, what do we then do with those employees? And I think the answer is we do a lot more. I think a lot of organizations fail to recognize or fail to remember that if we're employing a lot of highly educated, highly trained, especially CPAs, these are individuals that in many cases now require a master's degree to get certified. And we have them, doing what as they start their careers? Doing some of the most routine, rote data entry type of work that we can think of. Things I joke with Nargis and with others that my 8 and 11-year-old could potentially do, in terms of, matching up, doing manual reconciliations, manual data input, et cetera. So thinking not only about the cost, but what is the benefit of reducing that cost per head by deploying them on higher value activities is going to be critical. The other item here is, as we shift to risk, is really thinking about, from a regulatory risk perspective, thinking about how do we leverage technology to take the chance of manual error out of the process. And organizations, when they have manual data movement, of course, are going to have those checks and balances, making sure we're reconciling, we're ticking and tying. Not only does that take time, but to error is human. There's the ability for us to potentially miss those. So looking at your end-to-end spectrum of record to report through that record, close, analyze, and then ultimately report spectrum, and looking at how do you have a single source of data flow through each of those or feed each of those is critical to reduce the likelihood of risk and reduce the propensity for fraud to be committed.
Fantastic. Thank you, Jeremy. Well said. And that is a great segue that leads us to the next risk that we talked about, and that's audit compliance. Now, one may argue that things have gotten a little more manageable on the audit side. However, the area we still see our clients struggling with is the lack of follow-up on, for example, aged items. They're still struggling to get back to their auditors within a relatively small amount of time. And then when they have incomplete reconciliations, visibility about who did what, was the same person who prepared the documentation, was that person the approver? How can we make sure that's not the case? And that's where, again, I said, even though some companies feel a little more comfortable with the new audit regulations and compliance regulations, that work has become a little more manageable, but there's still heavy amount of time spent on the follow-ups and making sure where the people who worked on these several activities and getting back to the auditors. And of course, last but not least, please go ahead.
No, I was going to interject there really quick, Nargis, as well, and just speak to the fact on the audit side as well. If we're able to automate, some of the controls and some of the evidence generation, what it also does is dramatically reduces the auditor's volume of transactions they have to look at from a testing basis, where you may have to look at 30, 45, 60 different samples over a given period. If you're able to show that process is now automated through technology, you have to look at the configuration, and you really look at effectively two samples. You look at a positive and a negative to make sure that as that transaction flows through the system, the logic is treating it correctly. So it dramatically reduces the audit burden it places on your team as well. So really, if you think about it, hey, I'm reducing my cost, I'm redeploying my employees on the highest value activities, I'm reducing my risk of error, and I'm reducing the audit burden on those employees. Think about how much you're gaining in terms of being able to redeploy those resources to help become that transformational organization that we described at the onset.
Absolutely, and that leads very nicely to talent. Manual processes, manual accounting processes put our best talent at risk. And I love Jeremy's example of, of 8-year-old who can do the matching compared to Excel spreadsheets. And companies are spending so much time on highly educated people to do that task. It's the cost and the money that's being spent is one thing. The other thing is the employee morale and making sure the company culture is right and people are not frustrated or unhappy because of there's no innovation in their activity. As we leverage better tools to take care of the activities that can be automated, we will free up great talent to focus on the things that matter to us, the things that can move our company forward and get us closer to the next level of success for our organization. This is very insightful to see. Again, Gallup did research and they found out that 34% of any disengaged employee causes organizations for every $10,000, $3,400 is being spent on that employee. That's a lot of money. That again, it's the hidden cost that we don't see, but by bringing automation, by bringing this fully connected tech stack together, we can bring in the value to the organization. So we started with this okay, great, we have the ERP, we have the reporting tool and consolidation. Where do things fall through the crack? And that was right in the middle. That was the red flag. But the great news is that BlackLine is what brings automation into the scope of work. And that's where we see many, many companies who have sophisticated ERP tools and amazing, great, super powerful tools on the consolidation and reporting are not considering to leverage BlackLine. And with that, almost usually many times BlackLine is the last piece in when it comes to completing their technology stack. It's one thing to implement it, it's another thing to make sure that all these tools are connected together, at least there is a defined process in place so that you're leveraging the value that the record to report process that brings to the table. It's great to have so many tools, technology tools in place, but if we're not leveraging them to the extent that they can add value to our organization when they're all integrated and we know how data is flowing, there's not really much value or not the value that you can get out of your investment. And that's where Armanino comes into play. As Jeremy mentioned in the beginning, I hope that you have downloaded the data sheet for report to report from our website. And while you were not multitasking, we hope that you take a minute or two to review that and look through the information and the services that Armanino provides. But in particular, you're here to learn more about the value that we bring to the table as a BlackLine partner. We are BlackLine's gold solution provider in North America, and the modern accounting playbook implementation and sales methodology that is a great way of adapting BlackLine. That was something that Armanino was among the first companies or partners in BlackLine ecosystem who was chosen to get certified and help BlackLine to onboard clients, make sure that we bring successful delivery and implementation to you. Our goal here at Armanino is to make sure that you're in good hands. As Jeremy mentioned in the beginning, employees are our #1 priority. We don't just claim it. Our numbers, the data shows that. And the reason we want to have a great connected workforce is just to bring that to your organization and make sure that we're supporting you day in and day out so that you can focus on the innovation in your organization and become that innovative leader in your organization, regardless of what ranking, what level you have in your organization. So with that, Jeremy, anything else before we continue? Anything on our partnership that you'd like to discuss? Anything that I missed?
No, I think you did a great job there, Nargis, really just describing sort of where we fit in the ecosystem, what makes us unique, et cetera. And I think really it is just, it's a reflection of the investment we make, not only in our clients, but in the partnerships with software companies like BlackLine, knowing that we have to be bringing those best of breed products to bear, or we're not going to be able to live the purpose that I described at the beginning of the presentation here and have that positive impact on the lives of our clients. So it is something we're passionate about, and I think that you did a great job describing that for the group here.
Awesome, I appreciate it, Jeremy. And before we wrap up, we started with a story, or at least share that we're going to talk about you. Just let's pause. Do you have an answer for yourself after learning about what automation can do in order to help your business? Any idea about what financial transformation or how it can enable your marriage? And if you're single, that's totally fine. We're talking about happy marriage because this is a real Armanino story. And we were so delighted to be part of that journey with our valued client. So let me tell you the story. We were engaged as an implementation partner and for BlackLine. And then through that, of course, as we do, we introduce executive sponsorship. The success of our clients is highly, highly, highly important here at Armanino. With the client manager that we provide, with the project management team that we put on every project, making sure that we not only get you up and running on BlackLine, but you have a successful project. And it's that good that you want to come back and ask for Armanino services. So we were highly engaged with this client, and we got them through implementation and go live. And they came back to us and said, well, this project saved my marriage because now I have more time to be at the dinner table with my family. If single, the same concept can apply to you. By bringing automation to your organization and to your team and to your life, you can free up that time and spend it on any activity that you like doing. So let's rethink about what Armanino can do. If you have any questions, would love to connect with you. And if there is anything, we're going to get into the chat in a minute. That's just a very great story that we had, and we wanted to share that with you. It's great when clients have great business, but when we touch them personally, that's a different value that we add, and that's an additional inspiration that motivates us and our team to come to work every day. So grateful for that. Thank you again very much for your time, and appreciate it. Look forward to answering your questions. You see Jeremy and my contact information here. Please connect with us on LinkedIn. Find us on our website, reach out directly, call, email, whichever works best. And Jeremy, any final thoughts before we pass it on to our hosts?
No, I think you did a great job there, Nargis. I always love when we get a lead off with the cliffhanger of, will transformation save your marriage? And I love the story at the end because, to your point, I think, as a career consultant, being in professional services my whole career, one of the things that I love the most is exactly what you described, is when it goes well beyond just the tactical of, hey, we helped, impact an organization, but when it becomes very personal like that. And it's a great story, and I love hearing it every time. And to your point, our contact info is here for the benefit of the group. If you've got questions, please connect with us. We would love to discuss how we can help you and your organization through digital transformation.